Hello everyone. Today we will be presenting to you our analysis of Orange County's comprehensive annual financial report, and it will be presented by Dustin, Erica, Yvonne, and Anahit. So before we begin talking about the CFAR, I'm going to give a little bit of background information on Orange County. The county got its name for its extensive orange groves. They incorporated in 1889 and they're located in the southern part of the state of California. The county occupies land area of 798 square miles and they have a coastline of 42 miles with a population of over 3 million. Orange County is the third most populous county in the state and sixth in the nation, and they go by the mission statement, making Orange County a safe, healthy, and fulfilling place to live, work, and play today and for generations to come by providing outstanding, cost-effective regional public services. Next, I will be giving a CFAR overview. First is the introductory section, which includes the letter of transmittal that defines the primary government and discusses factors affecting the economic conditions, such as unemployment rates and long-term financial planning for the county. It also presents the GFOA Certificate of Achievement of Excellence and presents the organizational chart of principal officers. Next is the financial section, which includes the audit report, and the auditors are MGO, who expressed an unqualified opinion for the year ended June 30th, 2014 for the CFAR. The financial section also includes basic financial statements that include government-wide and fund financial statements, and they will be covered in more detail in a later section. Notes are also included, other supplementary information, and MD&A. MD&A provides financial highlights including changes in net position, long-term debt changes, and general fund revenues, transfers, expenditures, and other financing uses. Lastly is the statistical section, which includes financial trends, revenue capacity, debt capacity, economic and demographic information, and operating information.
Now let's have an idea about the governmental financial statements. It separates out in government-wide financial statements and the fund financial statements. Under the government-wide financial statements, there's statement of net position and statement of activities. Under the fund financial statements, there's governmental funds, preparatory funds, and fiduciary funds. After these two sets of the financial statements, we have the notes to the basic financial statements. This basically concludes the whole set of government financial statements. Now let's dig into it. Here's the statement of change in net position at government-wide level for the year 2013 and 14. As we can see in the picture, the total change in net position increased by 5% as compared to last year. According to the 10K report, the operating grants and contributions comprise the largest revenue source for the county, followed by the charges for services. This is the statement of net position at government-wide level under the assets section. As we can see on the statement, the governmental activities assets takes about 80% of the total assets. That's almost 4 times the amount of the business type activities. Followed by the assets section, this is the liabilities section. As you can see on the statement, the governmental activities liabilities takes about 75% of the total liabilities. Just like the asset section, it is almost 3 times the amount of the business type activities. Followed by the liability section, this is the net position of the statement of net position. As we can see on the statement, the net investment in capital assets and legally segregated for grants took about 90% of the total governmental activities. And the governmental activities has about 4 times the net position amount than business type activities. According to the previous few slides, we can see that the governmental activities has a heavier weight compared with the business type activities.
Now I will be discussing the statement of activities at the government-wide level prepared in accordance with the GASB model, and I will be referring to the financial statement on the right. The most costly governmental activity is public protection with a net expense of $398,976, and it is highlighted on the statement to the right. The sum of general tax revenues is $814,080, which is also highlighted, and total governmental activities total to $678,047. So all of the costs of governmental activities have been borne by the taxpayers. Next, I'll look at the net position, which increased in its business type activities from 2014 to 2013, as seen at the bottom of the statement. Next, we will be looking at the statement of revenues, expenditures, and changes in fund balances for governmental funds. First is the revenue analysis, and here is a snapshot of the revenue section to my right. So the system classification of revenues are first by fund, then by source for governmental funds. The most important sources of general fund revenues are intergovernmental, taxes, and charges for services, which are all highlighted under the general fund. The most important source of revenue for each governmental fund is also highlighted, and it is as follows. For the roads, most important is intergovernmental, flood control district is taxes, other public protection is intergovernmental, teeter plan notes are fines, forfeitures, and penalties, other governmental funds are intergovernmental. Total intergovernmental are about 60% of total revenues for the general fund. And with reference to the revenue section of this statement, the statistical section of the CFAR also shows changes over time in reliance on each revenue source for the last 10 fiscal years. And for the last 10 years, intergovernmental has been the primary, taxes secondary, and charges for services third, which is consistent for the year ended in 2014. Now let's look at the expenditures of the Statement of Revenues, Expenditures, and Changes in Fund Balances for Governmental Funds. So to your right, you will see the expenditures section of the statement, and the three largest categories of general fund expenditures are public protection, health and sanitation, and public assistance. Now, for the following funds, the largest category of each governmental fund is, for the roads fund, it is the public ways and facilities. Flood control districts, largest expenditure is public protection. Other public protection fund is also public protection. For the teeter plan notes fund, the largest expenditure is principal retirement. And finally, for the other governmental funds, the largest expenditure is public assistance. Lastly, we will look at other financing sources or uses on the Statement of Revenues, Expenditures, and Changes in Fund Balances for Governmental Funds, which is reported in a separate section of the statement below the Revenues and Expenditures sections. It includes transfers in, transfers out, and debt issued. Below you can see the example from the year of 2014, and at the bottom you can see the total for other financing sources or uses. Sources are presented in a positive number and uses are in brackets as a negative number. The budgetary comparison statement is presented as a part of the basic financial statement, and it presents actual data using the budgetary basis of accounting. The budgetary comparison presents the original budget and the final amended budget for each governmental fund, which could be seen on the slide. It also presents variance for revenues and other financing sources. Another section of the CFAR includes budget adoption and revision, which explains budgetary reporting practices that differ from GAAP and explains all the differences.
Now let's look at each different major funds for Orange County. For governmental funds, the major funds it has general fund, roads, flow control, other public protection, theater plant notes, and other governmental. For general fund, it's the major fund for Orange County. The total revenues and expenditures takes over 75% of the total governmental funds. The roads fund major in maintenance and construction of roadways. It specializes in engineering service to other governmental units and the public. The flow control is major in planning, construction, and operations of flow control and water conservation works. Other public protection funds is major in safety and law enforcement activities. Theater Plant Notes Funds is a special program offered to all California counties. For Orange County, in July 2013, they issued a long-term Theater Plant Notes for $40,000. It provides Orange County optional alternative methods for allocating delinquent property tax revenues, and governmental funds includes all the non-major funds. For example, it's the special revenues funds, debt service fund, capital project, and permanent funds. Now let's look at the preparatory funds. For Orange County, the major funds under the preparatory funds is airport funds, waste management, and compressed natural gas. For the airport funds, a major in construction and self-supporting aviation-related activities rendered at John Wayne Airport. For the waste management fund, it helps the operation, expansion, closing of existing landfills, and also opening of new landfills. The compressed natural gas fund is a new fund established in fiscal year 2009 to 2010. It accounts for the operation and maintenance of the compressed natural gas facility. The last part is the fiduciary funds. Under Orange County, the major fiduciary funds include private purpose trust fund, investment trust fund, pension and other post-employment benefit trust fund, and the agency fund. For the private purpose trust fund, it accounts for all the trust arrangements, and the income will benefit individuals, private organizations, or other governments. For the investment trust fund, Orange County separates out in two different lines. The first one will be Orange County Investment Pool, and the other one is Orange County Educational Investment Pool. For the pension and other post-employment benefit trust, Orange County has 6 different pension and other post-employment benefit trust funds, which accounts for the resources that are required to be held in trust.
Orange County has 2 capital projects funds that are considered non-major governmental funds. One is the Criminal Justice Facilities Fund. This is a group of funds used to account for monies received from surcharges and penalty assessments on offenses and then used for capital improvements to courts and other criminal justice facilities. A second fund is the Countywide Capital Projects Non-General Fund. This fund was established to budget and account for certain unspent and unencumbered carryover monies for multi-year approved capital projects. This fund is funded primarily with net county costs or general purpose revenue. To the right, you can see a breakdown of both these funds' revenues, expenditures, and other financing sources and uses for the year ended June 30th, 2014. You can see that the Criminal Justice Facilities Fund had total revenues of $5.4 million and total expenditures of $13.1 million. However, it had total other financing sources of $4.3 million, which equated to an end-of-the-year fund balance of $8.2 million, an amount less than that of the beginning of the year. The Countywide Capital Projects Fund only had other financing sources of $876,000, which left it with an end-of-the-year balance of that same amount since the beginning of the year balance was zero. Capital assets are assets of long-term character that are intended to be held or used in operations, such as land, structures, equipment, infrastructure, etc. Orange County has invested heavily in capital assets. As a matter of fact, the largest component of the county's net position, which equals 60%, was net investment in capital assets. As you can see to the right side of the page in the government-wide statement of net positions, Orange County's capital assets are reported as separate line items. Towards the bottom of the report, it shows under both governmental and business type activities the capital asset breakdown between the net amount of not depreciable and amortizable capital assets and the depreciable and amortizable capital assets, and then the totals below those amounts. As you may also notice, Orange County's capital assets under governmental activities makes up a substantially larger portion of total capital assets than under business type activities. Also, depreciable and amortizable capital assets make up a substantially larger portion of total capital assets than not depreciable and amortizable capital assets. In the notes to the financial statements, disclosures regarding Orange County's capital assets show the beginning balances, increases and decreases, adjustments, and then the ending balances for each major class of capital assets. To the right of the page, there's a financial statement note disclosure regarding change in assets for Orange County's business type activities. As I mentioned earlier, you can see the beginning and ending balances of each major capital asset under business activities and the breakdown of changes in the assets class throughout the year. Towards the middle of the report, you can see the accumulated depreciation and amortization for section. This section shows the depreciation amounts taken for each major capital asset class and business type activities throughout the year. As you can see, the total depreciation and amortization sum to about $626 million for business type activities. Also, towards the very bottom of the report, you can see a breakdown of how the depreciation and amortization expense was allocated among functions of the primary government. Under business type activities, you can see that about $26.7 million in expense was allocated to airport and about $15 million in expense was allocated to waste management. In the notes to the financial statement, Orange County also presents different capitalization thresholds that must be met before assets can be capitalized. To the right of the page, you can see the different capitalization thresholds for each major capital asset. These dollar amounts are in thousands, so the capitalization thresholds for each equipment, for example, would be $5,000. Also in the notes to the financial statements, depreciation and amortization policies and estimated lives of major classes of depreciable and amortizable assets are disclosed. To the right of the page, you can also see the breakdown of the estimated useful lives of each of Orange County's major capital assets.
Now we will be discussing Orange County's general long-term liabilities. As you can see, from 2013 to 2014, Orange County's long-term liabilities decreased by 7% or $105,347. This was mainly due to the early redemption of the 2003 airport revenue refunding bonds, and also the semi-annual payments on the 2005 A refunding recovery bonds and lease revenue bonds series 2006. The county's beginning balance of long-term liabilities has been restated to remove the deferred amount on refunding due to the implementation of gas statement number 65. As you can see, during the year, the county's outstanding bond obligations decreased by 16%, which is mainly due to the retirement of $149,692 of bond obligations. On June 30, 2014, Orange County had total debt obligations outstanding of $543,753. Excluding capital lease obligations, compensated absences, and other liabilities. Now I will be discussing Orange County's legal debt limit. The amount of general obligation bonded indebtedness the county can incur is limited by law to 1.25% of the last equalized assessment property tax roll. As of June 30, 2014, Orange County had no net general obligation bonded debt. And as you can see, for the fiscal year 2013 to 2014, Orange County's legal debt limit was $5,596,864. The next topic I will be presenting is on debt service funds. Governments do not have the option of presenting budgetary comparisons for other funds in conjunction with the basic financial statements or required supplementary information, which is why the following budgetary comparison schedule for the county's major governmental fund is located in supplemental information. Teeter Plan Notes is a type of debt service fund, and it accounts for the financing of the county's purchase of delinquent taxes receivable pursuant to the Teeter Plan. The teeter plan is an alternate secured property tax distribution plan whereby the county distributes 100% of the local secured levy to taxing agencies participating in the teeter plan and in exchange receives the right to keep the delinquent taxes, penalties, and interest. All of the teeter plan notes will be issued within 3 years of February 1st, 2013, with a maturity date of January 29, 2016. The total amount of the notes issued was $57,935, which reflects the issuance of the teeter plan notes. On July 16, 2013, the county issued an additional $39,639 in Teeter Plan B notes to finance the purchase of the delinquent property tax receivables associated with the Teeter Plan, leaving an outstanding balance of $83,125. Proceeds of this issuance paid the participating agencies in the Teeter Plan the full amount of their taxes from the secured property tax roll. There are many other debt service funds. These funds are used to account for the accumulation and disbursement of taxes and other revenues for the periodic payment of principal and interest on general long-term debt. That includes general obligation, revenue, and demand bond issues. One of the debt service funds is Public Facilities Corporation Bonds Master Lease. This fund is used to account for the Orange County Public Facilities Corporation revenue bonds and for master lease obligations. Another fund is the Pension Obligation Bonds. This fund is used to account for the debt service expenditures for the Orange County Taxable Pension Obligations Bond. The third one is the South OC Public Financing Authority Fund. This fund was established to account for debt service expenditures for the South Orange County Financing Authority. The SOCPFA was formed to provide the financing of public capital improvements. And finally, the Orange County Public Financing Authority Fund is established to account for the debt service expenditures for the Orange County Public Financing Authority. On August 16, 2005, the OCPFA issued Lease Revenue Refunding Bonds Series 2005 to defease certain non-callable recovery COPs, refund the remaining COPs, fund a debt service reserve fund, and pay the cost of issuance of the Series 2005 bonds. And this concludes our presentation. Thank you all for watching.